Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar at present is not leaving any hurry for the bear side, as the market still potentially holds to a negative case with the RSI breaking down along with the MACD. Although we have seen quick attempts to try and take on the upside challenge, the market is still very defensive and therefore moves towards 63.25 to 63.85 and even towards the simple day 60, that is, simple day moving average, around 64.40-45 should serve as a cap. It is assessed that further weakness should come into play. Now, if we take out the level of 62.60, I expect to see a move towards at least 61.70 to 61.20, or even with the objective coming in roughly around 58 cents. The market got a little bit of an upstep earlier after the March retail sales climbed 8.2% month on month, which was much better than the previous month of 0.5. The Australian Bureau of Statistics decided to release the preliminary estimates to provide confidence back into the market, and therefore is supportive that how the economy is performing through the situation of the coronavirus. But as I mentioned, the technicals are remaining somewhat negative. The euro is heading closer to its objective as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, strengthens to 100.56 as of writing. It is assessed that the target to the downside will hold towards 107.35, with any initial upside attempts towards 108.55 to 109.20.25 to fail. Still to come is tonight, that is, the US initial jobless claims for the week ending in April 17, with the forecast seen around 4.3 million, with a previous of 5.2 unemployment claims. I would say that the dollar index is still going to maintain a relatively bullish stance and keep the objective to 107.35 and reassess there for the euro. Well, I would wonder with what's happening with dollar yen, it looks like for the last 8 trading days, the bears have been asleep. And the bulls haven't really taken on much of a challenge either, with the market coasting sideways, as I say, for 8 consecutive consolidating period, is that the downside still remains vulnerable. Now, if we do get a break of 106.60, which I anticipate, then we could see a move down towards 105, and where the market most probably may pause or at least show some profit taking. The pound went back to test the break of the level of 123.70 overnight, but struggled. From presently how I'm viewing it is the MACD and also the RSI is relatively weak. I do feel since the break of 123.70, although the target was nearly reached at 121.60 after posting a low of 122.46, still remains vulnerable and still achievable. So let's see if the market does continue to the downside. From this technical pattern, I would say so. Well, with the attempt to the upside above 142.20 failed, Canada sharply turned around after posting a high of 142.37, just 17 points above this level, and plummeted. And from a technical point, is still questioning whether we can get above that. But the fact is that the oil has staged a significant, nearly 20% recovery overnight. Could see further risk to the downside. Now, if we see a break of 141.15, then that should open the way back towards 139.90. As I mentioned before, upside attempts should fail. Although I haven't got the call, because of the fact is there is no trend from the ADX, we saw a significant rally in gold overnight, with the market rebounding from 1,679, posted a high this morning of 1,718. From the rebound, the break of 1,712 has reopened the upside to 1,748.52. However, it should be still pointed out that trading gold still presents itself a high risk trade due to the swings that we are seeing, and therefore could easily see a pullback from where we are to 1,680.84, but still present itself in a bullish manner. I suppose this hammer that came through did encourage the bulls. Now, as I mentioned, we did break 1,712, but we are slipping under there as I speak. But let's see if the market can recover further. But the technicals are still questioning whether the rally can continue. So I don't have a strong view at these levels, and therefore I would rather refrain until possibly seeing a pullback. I would like to see the ADX trend because over the past has provided a very potentially good trade in terms of how the market's performed. Now, overnight, the market got a little bit of a mixed reaction after it rebounded after Trump signaled fresh tension to Iran. It was mentioned overnight in a tweet that he instructed the United States Navy to shoot down and destroy any and all Iran gunboats if they harass the US ships at sea. After earlier the market falling quite significantly, the rebound still pretty much, it's got a lot of work to do. Since the break of $20 a barrel, I don't have a view. And presently I find in this environment is that it's still hard to present any technical levels until we see further evidence of a recovery, which I still would like to see because the ADX is still trending, so therefore could see further weaker play in this whipsaw manner that we've been seeing. So I'd rather refrain from any call for the moment. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the rest of the day.